Ladies and gentlemen, members and guests, today we have something you've never seen before, you might never see again, and I'm sure you're going to talk about for many years to come. Our keynote speaker today, Simon Trott, Chief Executive Iron Ore Rio Tinto, will have a conversation and discussion with Jennifer Hewett, National Affairs columnist from the Australian Financial Review. Jennifer writes a daily column covering business and politics. She's been a journalist for over several decades for a range of publications and has worked as a foreign correspondent based in New York and Washington. Originally from Western Australia, she divides her time between Sydney and Melbourne. Familiar with the weather today, of course. She also appears regularly on TV and radio. Members and guests, please, will you join me in welcoming Jennifer Hewett to the stage? Ladies and gentlemen, to introduce Simon Trott, I'd like to invite excuse me, John Tivy, partner White & Case, to the stage to make the introduction. Thank you.
Members and guests, it's my pleasure to introduce today's guest speaker, Simon Trott, Chief Executive, Iron Ore Rio Tinto. Simon Trott was raised on a farm in the Western Australian wheatbelt town of Widdup, population 380, good country lad. After studying at Perth's Christchurch Grammar School and earning a degree in agricultural science at the University of Western Australia, Simon joined Rio Tinto in 1999. With 25 years' experience across operating, commercial and business roles at Rio, Simon is dedicated to fostering a culture rooted in strong values and high performance. For the past 3.5 years, Simon has been Chief Executive of Rio's Iron Ore Division, leading the world's largest and most innovative integrated bulk commodity producer. In this role, he's focused on transforming the operating performance of the iron ore business, pioneering mine development, and forging respectful, trusting partnerships. He is committed to self-determined outcomes for traditional owners, as well as positioning for a green future and decarbonising the Pilbara. In addition to all of the above, Simon is a proud father of 3, a keen cyclist and an avid supporter of the West Coast Eagles. Members and guests, please welcome Simon Trott to the Melbourne Mining Club.
Good afternoon, everyone. It's a great pleasure to be here with a fellow West Australian, even though I no longer live there. I went to WA last week and went up to one of Rio's mines, and it reminded me yet again of how amazing this industry is and how many changes there are as well. But if we just start with you, Simon, I'll just start with a few more personal questions initially. So you started with ag science. What happened then? How did you get into, you did resource economics then, why?
And maybe the place to start actually is also just to acknowledge some of those in the room that have come before me. I sort of grew up listening to people talk at the Melbourne mining clubs and giants of our industry, and it's a bit of a thrill to be here, to be honest, Jen, and it's fantastic to see some of those faces in the room, and that probably links to your question. No, I thought seriously about going back to the farm. I actually went back and ran it just before I joined Rio, and I really enjoyed farming, but I didn't love it. And I also realised one of the things I really do love is working around people. And in Western Australia, you grow up obviously fairly connected to the mining industry wherever you are. And I looked at some of the things that were happening in mining, probably at that stage some of the remuneration available in mining as well, and probably gravitated towards that. And so I did ag science, but I did honours in resource economics to try and bridge across to mining. And my first job was working in the industry as well. And
then you I think you worked in Argyle, is that right?
Yeah, so I was originally fly in, fly out at Argyle first shift that you, in those days when you used to go to Argyle, you'd stay in a place in the camp called the Bronx, which where they set all the newcomers. And I must admit, the first few days you sort of look around and think, oh my, what have I done? But I moved out of the Bronx eventually, and really loved the time up at Argyle. I hadn't spent a lot of time in the Kimberley at that stage, and for those that haven't been there, one of the really unique places in the world, and Argyle at that time was a really fantastic mine to learn the ropes, as it were.
And then you did a few transactions for Rio, some more successful than others. You led the transaction with Gina Reinhardt for Hope Downs, for 50% of Hope Downs. Then, of course, in London, I think you did there were a few things with going on, deals that didn't quite go so well with BHP and Chinalco. What did you learn from that experience, and are you actually pleased now that all those deals fell over?
When you're working on things, you develop a bit of a love for them, and so I guess at the time, some of them I probably thought were the right move and should happen. Some of the others at that time, maybe not. I'm probably a pretty optimistic person, so you always say it's turned out for the best. I learned an incredible amount through the defence, the Chinalco arrangements, the BHP joint venture. It's probably 5 or 6 years of experience squashed into a couple of years. I certainly learnt just the value of having the right people in the right roles. When I look at some of those teams that have gone on to take really big roles within Rio, actually a lot of roles external to Rio as well. The value of really good teams. And I'll probably also, and actually funny enough, someone asked me about it last night at an investor dinner. I probably also learnt that you can put your tickets on a few things, but there's not that many tickets that you've got. And so when I look at that period through, I guess it was 2008, 2009, the opportunity cost of those transactions, whilst the direct costs were significant, the opportunity cost for what it meant that ourselves and BHP didn't do at that time is a very big multiple of that. And so probably that would be one of my other reflections, that you got to really focus in on what you want to do and then make sure that you land it.
Yeah, and one of the reasons that the BHP and Rio joint venture didn't go ahead was, I think, because of competition concerns, one of the reasons. Do you think now that with the increased competition that it does exist in the industry, that would still be an issue or not?
I think the industry has changed significantly since then in terms of the depth of the industry and the competitiveness of the industry. And so I'm a competition lawyer, so it's probably a question for them. But I would say that the markets are deep and competitive, and you're certainly seeing that in the marketplace today.
Okay. So you came in to head up the iron ore division in 2021, which of course was the year following the term that's now become synonymous with the worst period of Rio, I guess, in the public mind at least, Juukan Gorge. How did you, that obviously was going to require radical change. How did you kind of think about that, and what were the principles that guided you?
So when I reflect on that period, one of the areas that we have had real focus on since then is around social licence, and for a mining company, you either have a strong social licence or you don't exist. Ultimately, we're mining in all the jurisdictions around the world in which we operate. We're mining other people's resources, and so you either have a strong social licence or you don't exist. In a way, I think the rebuild of that over the last few years has happened faster probably than I expected. And I think part of that is it wasn't that we were creating something new, we were reconnecting with perhaps some of the heritage of Rio and CRA from days gone past. And so it's easier to reconnect to something than to create something new. And so that's certainly been part of it, is reconnecting to that. The organisation, I've got to say, feels different today. Rio at its best is really external focus, connecting externally, and probably compared to some of the industry has greater tolerance for a diversity of thinking and different approaches. And I think when we harness that, we're very, very strong. Probably as an organisation, we were gazing into our navels a lot rather than looking outside the boat as well. And so part of the change has been around that being less defensive, looking externally. I think Rio through the ages has been one of the organisations that's partnered really well with third parties, and I think that's part of that heritage around engaging and working externally.
But what about changing the culture internally? How did you go about that? And how far do you think you've got on that now?
I think coming together as a team, and certainly under Jakob's leadership, people and ultimately culture is the sum of all the actions taken within the organisation. And I think it was absolutely the right place to start in terms of rebuild. I would say we've still got a long way to go in terms of getting to the culture that we really want. But a lot of the things that you're seeing in the organisation, whether that's best operator and operating performance, whether that's response to things like the Everyday Respect report, whether that's things like the recent Arcadium transaction in lithium, they're outturnings ultimately of the culture that you're building and focusing on. And ultimately it's how do we as people relate to each other? How do we work together in teams better? Being really clear around who's doing what, those aspects, I think have all been part of it. I think just being really open about the challenges that we have got. And if I think about how the organisation feels different, it's probably that piece, people willing to raise their voice, people willing to put issues on the table and talk about them in a really open way, both internally and externally.
Okay. And cultural heritage in terms of Indigenous heritage, how you said you were kind of reconnecting in some ways. What does that mean, and what changes, though, have you had to implement?
So probably three main areas of change. So changing how we mine. So if I look at the way that we're operating today on the ground, that's very different than it was a few years ago. From blast management plans probably cover 30% now to reduce vibration and protect cultural heritage areas. Changing how we engage. Take a mine like Western Range, which we're currently constructing in the central Pilbara. Effectively ended up rolling out the maps for Western Range and co-designing it with the traditional owners in Awonka of that area. And so changing how we engage and develop. And I think just the depth of engagement with traditional owners across our business. In some ways, I think Rio used to do that really well, and that's been reconnecting to that, but the depth of that integration, of that engagement at all levels of the organisation is different than how it was.
So when you're talking about the blast management plan, are you saying that you have really changed the operations? Can you explain what that means?
So we've changed the way that blasting is obviously a big part of our business. So that means smaller benches, it means lower powder shot ratios, reduced drill diameters to effectively reduce vibration at the margins of our mines. It's an example, it's not the only example. Changing the way we do water out in front of our mining businesses to protect adjacent areas, changing some of the ways that we operate our plants to ensure protection of cultural heritage areas, reviewing all of our cultural heritage areas and working with the traditional owners around the sites of significance and how we protect those.
Does that add costs?
So it certainly adds cost. It's absolutely the right work to be doing. It adds costs, it adds capital intensity as well in terms of the way that we develop a mine like Western Range. The costs for that were higher because of the way that we developed it. And
does it add delays as well as part of that?
I mean, if I step back, I think one of the features of the mining industry in Australia, probably in every jurisdiction around the world in which we operate, is the expectations of society have increased. And so approval times are longer than they were, and the expectations around the way that we mine is greater. I mean, I think mining ultimately is in many jurisdictions it's needed, but it often feels is not wanted. And part of that's on us in terms of telling our story well. I passionately believe that mining done in the right way is essential for the societies in which we live in. And so that's our focus, is making sure that's how we operate our business and that's how we develop new areas.
And in terms of traditional owners and negotiations with them, sometimes you have splits in those traditional owners. How difficult is that to negotiate?
I think in any relationship you have areas you agree on and areas that you don't. We've got 11 traditional owner groups across our Pilbara operations, and there's many different views around all aspects of those arrangements. I think on some parts there's actually really good alignment. I think on some parts and some of the commercial aspects to those relationships, we're working through a process as we renew those agreements, and there's some of those conversations that are really hard. And that's true for any relationships. I think to some degree it's about how you navigate through some of those areas you don't agree and focus on the ones where you can.
Okay. And the other, of course, the issue that's been of concern has been the possible changes to the EPPC Act. You seem to, well, not you in particular, but the industry seems to have warded off what you were fearing. Is that because Anthony Albanese was scared of losing WA seats, do you think?
So there's someone I engage with regularly that's always reminded me, policy, not politics. And so as to the policy, our view, and actually we put out a statement recently around our view on EPBC, certainly supports strong environmental protection. I think the mining industry is a really good example of that, and support reform to the environmental policy. That reform has to be efficient and effective. Effective to protect the environment and efficient in terms of approvals. And so that's been our commentary on EPBC. It has to meet those two objectives, and we want it to be workable, and that's the way we've approached it.
So I see that you've told regulators, I think, that you're not going to do the Giles Mini development or project because of the ghost bat, not the drone, the predatory ghost bat. How much more difficult and costly does that become when you have to make those changes? And in terms of the nature positive laws and the idea of kind of swapping one hectare of mining land for 1 hectare of natural habitat, how realistic is that?
So we reached commercial arrangements to be able to access the Rhodes Ridge deposits last year, the year before maybe. Rhodes Ridge, amazing deposit, the best undeveloped tenure in the Pilbara, so more than 6 billion tonnes of reserves and resources. One of the really good things about Rhodes, and to be honest, I probably wish we were in there today, but better to have it in front of us than behind us. One of the good things about Rhodes is it gives you options because of the size of that tenure, and so we're targeting a development of Rhodes Ridge by the end of this decade, and to be able to meet that timeline, we've focused in the approvals on the initial developments at Rhodes, and that gives us time to do a regional assessment of Rhodes, and it gives us time to do the monitoring and management plans and the like, should we be able to access an area like Giles. So it's not that we've left Giles behind, it's just that we're focusing on a different area of those tenements for the initial development. As I say, by the end of this decade, and Rhodes is a really good example, I think, of how you can develop those areas consistent with nature positive. And so one of the concepts we're looking at in terms of the ridge to the reef and how you ensure that we enhance biodiversity through the Pilbara. What you can't do is, if there's a mine site, you can't have nature positive over the area that you're mining. You've got to look at it on a more regional basis, which was exactly some of our comments on EPBC reforms, that they needed to account for that regional basis. So it is realistic to do on a regional basis. Within a given square, you may not be able to do it.
One of the other issues, of course, for the industry has been the government's industrial relations changes. I see Tanya Constable sitting down there. She gave a rather stern speech, I think, at the Minerals Council a couple of weeks ago. Rio hasn't been quite so vocal in its objections to industrial relations changes. Why is that?
So the relationship between employer and employee, and that direct relationship, has delivered incredible benefits to Australia in terms of productivity. It's been good for employees like us. It's been good for employers in terms of the wages and conditions that they enjoy, and that's our focus. That's the commentary we made on the proposed changes as they were. They've since passed. On industrial relations, we all have, I guess, different stylistic approaches, Jen, to how we approach those issues. I think there's pretty good alignment in terms of some of the comments on those reform. Now we need to live within the legislation that's in place at any given time, and so we'll work with the arrangements as they currently are.
Very diplomatically put.
Indeed.
But the other thing that I don't think is particularly diplomatic, and I've been astounded to hear even senior ministers talk about dig and ship in a kind of fairly dismissive way. And I think do you think there's just a lack of understanding about the sophistication and the significance of the mining industry, and why is that?
I must admit I was really pleased to hear some tables from universities here today and students. I mean, when I look at my experiences and the opportunities that I've been privileged to have in our industry, it's a long way from dig and ship. You stand in the stockyards at Karratha, and you can see our autonomous trains coming in. You can see Woodside's facilities there. You can't see many people, but you've got billions of dollars of Australia's export wealth sitting before your eyes. You've got the world's largest robot, you've got big data, you've got all the sorts of jobs and skills that people aspire to, and it is a long way from dig and ship. I must admit I get probably frustrated about it as well. I think to some extent that's on us here in the room to be able to articulate the story of what mining actually in this day and age looks like, and some of the opportunities that it provides. But also, as you walk around the great cities of Melbourne and Sydney and beyond, the contribution that it makes to all of our lives. And I was chatting at the table earlier. I think Australia's got to really focus on what are its competitive advantages, and how do you lift everything up. There's often a bit of a debate about how you shift resources from one area to another. I probably feel we've got to focus a lot on where our competitive advantages are and how do you then drive everyone up. And I think that's why Australia today does enjoy an outstanding standard of living, and we've got to keep doing that to continue to enjoy the same going forward.
At the same time, of course, you're evolving in all sorts of ways in terms of your production. The Financial Review reported this week that you're kind of reconsidering your future production strategy. Can you explain what that means?
So that the product strategy is effectively how what products we take to market, and probably three main drivers behind that, Den. So we've got Simandou is a project in Guinea that we're developing. That we've got coming in. We set up portside trading in China where we're able to blend product from different countries. So from the Pilbara company we've got in Canada, IOC, third-party ores. With Simandou coming in, it makes sense to have a look at our product strategy again. Rhodes Ridge I talked about earlier. We've got options there in terms of which areas we go into first. And thirdly, just the nature of the Pilbara has changed in terms of costs and capex. We need to ask the question, are we best utilising the ore bodies for those current settings? So they're all the things we'll look at as part of the review of product strategy. It's something we do every few years, and it's time to do it again.
So does that mean, like, because you're getting lower grade ore out of the Pilbara, a lot more lower grade ore, that you'd think about blending in China with Simandou and something from Canada?
Potentially, yeah. So there's probably two parts, is what areas do you mine in terms of what products do you mine, and then how do you package those iron units for the market. We currently sell different products. Should some of those be joined together and sold as one product? Should we disaggregate some of them because we already blend different ore sources?
So is the Pilbara blend going to be kind of deprioritised?
Pilbara blend in some form will remain a mainstay of our product offering. It's around how we best package the overall portfolio.
And of course, with Simandou coming on, people are concerned about the impact on that, given how Australia will be, how the Pilbara is competitive with obviously lower cost countries.
So the overall iron market, so seaborne iron ore is a term we look at is 1.6 billion tonnes. So 1.6 billion tonnes every year. To put in context the size of the business in the Pilbara now, I normally use Optus Stadium, but in Melbourne, if you think of Marvel Stadium, every day we mine an equivalent amount of earth to that which would fill all of Marvel Stadium. We're moving something around like 3,500 people. We fly from Perth to the Pilbara and back each and every day, 2,000 kilometres of rail. It is an amazing business, and it's also an industry scale, and so Simandou, as it comes on at the end of next year and ramps up to a targeted 120 million tonnes, the world's going to need those FE units. It'll need that product. And I think the thing that has been missed is just the size of 1.6 billion tonnes every single year. We're going to need Simandou and more resources like it.
So, yes, having just been delayed on a Qantas flight, I can see the
you had the full Pilbara experience.
Yeah, the full experience. Yeah, but do you think with you're still on track to do one new mine a year on average, despite all the kind of issues with costs, with delays, with approvals?
So as you say, we need a new mine every single year. We're in that phase. Some of our existing operations are closer towards the end than the beginning, and so we need a mine a year, and then we bridge across to Rhodes Ridge at the end of this decade. Look, it's got harder. There's no question in terms of developing new operations, and I think that's true in iron ore. It's true in all of our commodities. We're on track in terms of Western Range, and that next tranche of mines are on track. There's one at the back end, the Mouldy, which has slipped a little bit, but it's an area that we're working really hard at ourselves, our stakeholders, government, etc.
And of course, one of the big issues has been the level of demand from China. Whether that's going to continue. All the excitement about was there going to be fiscal stimulus, etc. Was there not? How do you feel about the level of demand from China and frankly the price?
So China's at a structural peak in terms of steel demand. We can have an argument whether it was last year, this year, or next year, but all economies go through an initial phase where they consume significant steel, new bridges, new houses, new roads, etc. And so China's at that level now, but the demand stays really strong. So iron ore will remain a large and really profitable market for us. We're not going to see the same growth rates out of China in terms of steel demand in the next decade as we have in the last decade. And so that means we've got to really focus on our business settings and make sure we get those right.
So you're saying it'll plateau almost no matter what we're talking about?
So overall steel demand will plateau from here. You get a little bit more scrap coming in, and so overall iron ore demand will plateau and decline from here.
And what does that mean for price?
So prices will be the interaction of both, as I say. Supply side, it's getting hard to develop new deposits. And it's not that demand disappears. So, the world consumed a lot of steel in, let's say, the last 30 years with that growth in China. You're going to need more than that in the next 20 years. And so the demand stays really strong, really iron ore, but also the rest of the commodities. It's the famous stat on copper. The world's going to need more copper in the next 30 years than it's used since the time of the Phoenicians. And so the commodity industry is going to be a good one to be for some time.
And we talked a little bit about India, or people talk a bit about India. They say it's self-sufficient in iron ore. Do you think there's going to be any opportunities there for Australian iron ore?
India's growing really fast, so 150 million tonnes or so of steel now. It'll get to 250 sort of in the 2030s. It does have domestic supply, and the domestic supply is pretty good in terms of grade and impurities and the like, and so it will be more self-sufficient than a place like China. I think there'll be opportunities for us in India, inevitably, if you get those sort of growth rates, 5% plus in a steel industry. You'll have moments in time where we can get some tonnes into India. It probably won't be sustained at the same sort of levels as perhaps we saw at the early phases of China.
And of course, the other big challenge for the industry and for the world is the whole issue of decarbonising your product, decarbonising your operations. So explain how well you think you're going there, or badly.
Again, there's decarbonisation of our existing operations. In a Pilbara context, I'm about 3 million tonnes of CO2. Good pathway in terms of gas replacing with renewables. Some really work to do on diesel. There's no solution currently available for us to defray those emissions. The big one for us as an industry, though, is decarbonisation of the steel production, which is about 8% of global emissions. We're working with customers and we're doing R&D ourselves. One of our big objectives is making sure that there is a clear pathway for Pilbara ores into green steel. Pilbara ores, because of their chemical and physical composition, don't work particularly well in green steel, and so we've got some work to do to make sure that we crack the code, as it were, for Pilbara ores into green steel. So a pilot plant called BioIron we're constructing in Perth, and some work we're doing with BHP and BlueScope on what's called the Neo Smelt, which is effectively a smelter in the process.
So, I mean, I know it's very hard to kind of predict where you're going to be, but how optimistic are you about that R&D, like being, like in the, in the next few years, or were you thinking of decades?
It'll take time for that to. The blast furnace fleet in China is still relatively young, and so this is something that's going to play out over many years. The next phase for us is the pilot plant, as I say. If sitting here a few years ago, I'd say it was probably my number one thing on my mind that I was worried about in terms of that. We're beginning to see avenues to where Pilbara ores can economically flow into green steel, and so we've got to do the work, but we're beginning to see that promise, but it's going to unfold over many years, Jen.
And in terms of your operations, I mean, so those autonomous trucks are always, staggering to see, but how do you feel about, the idea of battery trucks? Does that mean maybe you'll get smaller trucks? How is that going to work?
So I think smaller trucks will be part of the answer. We can't use them everywhere, but for some applications there'll be, and we've done trials. Being autonomous means we're not driven to the same economies of scale that we used to be driven to, ever larger trucks. So it'll be a portion, but not all. And so we've got work to do in terms of making sure we've got electric trucks that can work. And at the moment, the energy density's not quite there, and also there's the technology for recharging to be able to do that efficiently. I've got no doubt we'll get there. We've announced, again, some work we're doing with BHP and our OEMs to get that to happen, which I think is a good example of the industry coming together and working on common problems, which personally I'd probably like to see more of, but that's work ahead of us, but I think we'll get there.
And in terms of solar and wind, building your own or negotiating with third parties to do that, how?
So I think you'll see us do a mixture, stuff we build and own and operate ourselves, and probably power purchase agreements where we'll underwrite others to do. Probably the most interesting ones, the announcements we made recently with Injibandi and Nullamar, traditional owners along the coastal part of the Pilbara, where we're working with them and capital providers to potentially help build businesses around renewables for traditional owners, and we would effectively sit in the background as a purchase or an offtake.
So, in terms of, I know it's always hard to look a little bit, out, but if you, what would you like to see in the Pilbara in 10 years' time in terms of how it operates?
I mentioned at the start some of the giants in the room, and to some extent the reason we have the business we do today is because of the decisions that they took. Actually, it's a bit of an aside, but I saw Chris Rennick earlier, who I used to work for, and I remember when I first was working in iron ore, I'd made a mistake on something, and Chris sort of leant back in his chair and said, "It's the 5 Ps, Simon. Preparation prevents piss poor performance," and it's always stuck with me since. But some of the decisions that were taken by others in the room, and to some extent, it's one of the things we talk about, myself and the current leadership team. We've got to make sure that the people walking in the door when we walk out of our roles, not hastening that, by the way, Jen, but when we move out of our roles, we've got to make sure that the people walking in have got more options than we did when we came in. And one of the really nice things about mining, one of the difficult things about mining is, to some extent, the decisions and the things you do don't express themselves for some time. So I guess it's a long way of saying, in answer to your question, I simply hope that the business is stronger than it is today, and that others, potentially table 26 or whatever the student table is, others have the opportunities to work in a business like I've had.
Now, I know I'm big, but just one last question I meant to ask. One of the things about the future, and one of the things that I was really impressed with when I was up at Hope 4 was just the increasing number of women in mine operations. So how much are you what type of percentages are you looking at? What are you targeting?
So we're targeting maybe go back a step. What we want is workplaces that are respectful. What we want is workplaces where there's real diversity of thought, because they're healthier and much better. They're much safer. They're better decision making. And so really pleased with some of the progress we've made towards that. A long way to go in terms of gender diversity. We're targeting an uplift of 2% per year, and pleased to see over the last few years that's what we've been able to do, particularly by centralising some of our recruitment and making sure that we're attracting people from outside our industry, whether that's men or women, but from outside our industry, and I think that's been part of that change.
All right, well, I'm definitely getting the wind up now, so time for audience Q&A.
Well, I think after that marathon effort, I lost count of the questions, but there was a lot of them and they were fantastic answers. Would you join me in thanking Simon and Jennifer, please? Ladies and gentlemen, we've got time for questions from the floor, so I would invite you to stick your hand up. And if you're asking a question, please wait for the microphone, stand so we can see you, and state your name and affiliation. We've got a microphone here and a microphone here. And I'm sure we have not exhausted all of the questions, particularly of a company like Rio. Believe it or not, there's a question on the students' table right in the middle.
Hi Simon, my name's Vivian and I'm a fifth year civil engineering and law student from Monash. I'm also here on behalf of the Oz IMM Melbourne Student Chapter. Thank you for your speech. My question is related to your what you mentioned about industry working together, and I really liked that aspect. I've been learning a little bit about critical minerals in the past year or so, so a bit green. So forgive me if I'm missing anything obvious, but with critical minerals I've been learning that it's a lot of small and mid-tier players having to step up to the game here, because big companies such as BHP and Rio Tinto are perhaps more interested in like the industries of scale. So how do you see Rio working together with other players in the industry to achieve the goals related to critical minerals? Thank you.
Thanks, Vivian, and well done for your question. I think at uni I may well not have wanted to put my hand up, so well done for that. We've got to make sure we focus on comparative advantage, and in some minerals and some areas that's not our comparative advantage. We do already produce some critical minerals. We've got a significant mineral sands business, titanium dioxide, and some other products which flow into critical minerals. So we do already produce some, and we're certainly looking at adding to that from products that we're not currently monetising through that. We've announced plans to purchase a lithium business. Some of that obviously will flow into some of the same applications as critical minerals. Some of them are very small, and they're not necessarily minerals that we'll go after, and we don't have a place in some of that industry, and so we'll probably focus on particularly the large bulks, the metals, and metals like lithium.
Richard Shoddy, I'll ask a question as a microphone bunny. You just to follow on from the last point, you were talking about lithium. Over the last 50 years, Rio Tinto has built its iron ore business up to become the engine of the company and the major profit generator for it. If you're taking a 50-year view into the future, do you see that lithium or some of the other critical commodities will become just as important? And what's the internal story within Rio Tinto about where the job careers are?
So we used to do a leadership course, which I remember attending in sort of the early 2000s, and you put a pie chart up on the wall and it was Rio's cash flow or earnings, I can't remember which, and there was one business that was making all the money, and you go around the room and given the current context, people say, oh, that's iron ore, and it wasn't, it was our minerals business at the time. And so I've got no doubt our portfolio and the contributions from all of our assets will be completely different in 20 years' time than it is currently. We're obviously investing in lithium because we like the space. As to the jobs, I've got kids 18, 16 and 14, and it's probably a regular topic of conversation with them. And I spent a week looking at artificial intelligence over the last month or so. I think the world's changing really fast. It's really hard to say, go and do job X. It's a bit vanilla, but what I would say is go and do things that you love, because ultimately you'll be good at them, and that'll translate into opportunities.
Simon, believe it or not, there's a second question from table 26 right in the middle of the room. I think the students are just passing the microphone around.
Hi everyone, my name's Ayla. I'm a Monash Uni student studying geology and IT, and I'm in my final year. Thank you for the fantastic talk, Simon. My question is more personal. I guess you've had a very successful career, and I was wondering if there are any qualities or skills or attributes in yourself or other leaders that you can recognise that have seen you have such a successful career?
Probably two I'd call out. I think resilience is just incredibly important, just to keep going. I think the other one's curiosity. When I look around the table, and when I think of people that I think have gone and done phenomenal things, it's that curiosity to try and understand, to ask why. You can always tell when someone's asking more questions of you than talking about themselves, that curiosity to really look external. I think that's one of the attributes that probably goes a long way towards success these days. Thanks.
Are there any other questions from the floor? Oh, we have one. Oh, and believe it or not on the student table, but it is a person qualifying themselves for a career in mining sitting on another table. Simon.
Hi, my name's Charlotte. I'm a third-year geology student at Melbourne Uni. Recently, our cohort went to the Wandora campus at Rio Tinto, and we discussed a lot the fact that in general, across Australia, fewer and fewer students are taking geology for their degrees. And my cohort's, I want to say 14 students, and our previous cohorts have been fewer than that. What do you think industry's role is in increasing enrolments in geology in the coming years?
I think part of it is the industry telling its story and talking about the opportunities that are available. When I ask my kids what sort of jobs are you interested in, and they list them off, a lot of those are available within mining, and yet even for them, and they're obviously exposed to a lot of resource industry knowledge, even for them, they don't associate mining with a lot of those activities. So I think part of it's that. I do think in Australia, as we think about comparative advantage, R&D and really making sure our secondary and tertiary institutions are developing the right skills and the right people. I do think that's an area that we've got to look at a little bit harder in terms of society. I think as we look around, some of the skills aren't there that used to be there, and we've got to really question why that is.
Simon, I think we have one last question, which is at the back of the room.
Thank you. Davy Lafella, Alvarez and Marcel. Planning prevents piss poor performance. Love it. Thanks for sharing that. With respect to the planning aspect, many of us in this room have been here coming along for a couple of decades, and the observation here is that the things that we need to do now in terms of planning are very different to what they used to be even a few years ago. Simon, can you make a comment about your ability to plan today versus what it was only a few years ago, and whether you have the breadth and depth of talent and systems and processes that will allow you to access those upside opportunities, but very importantly, manage those downside risks? Thank you.
Probably the thing I think is the most different today than it was not even that long ago is just the complexity and the number of things that are getting juggled. Previously, when I think about it, there was trade-offs between a few competing aspects. If I look within my business, within some of the other businesses around the the group. The number of things that we're now trading off, whether that's commercial aspects, approvals, geopolitical, strategic, the number of things that are being traded off, I think is probably more complex and intricate than it was, and that clearly goes to planning. A lot of the same tools are there. We've probably got much better at doing some of the planning, but the world that we're responding to, I think is dynamic, and it's changing all the time, and probably at a greater pace. And so that's one that we're sitting in a bit in terms of thinking about how do you respond to that. A part of that is making sure you've got adequate options to be able to flex, because whilst we'd all love a crystal ball, none of us in this room really knows what's going to happen in a few years' time. You think over the last few years, some of the things that we've seen, mass pandemics, the world's greatest cities closed, conflicts in areas that we probably wouldn't have expected. And so none of us know how the world's going to, how do you set up a system that you're not predicting the future but can respond to the different scenarios as they play out, and that's probably an area where we're thinking more about.
Ladies and gentlemen, I'd like to call on Andrew Hall, CEO of AMC Consultants, to deliver the vote of thanks.
Thank you, Hedley, and good afternoon, everyone. It's my pleasure to formally thank Simon Trott for featuring in today's conversation. Simon shared a wealth of valuable insights, highlighting the impact that increased social expectations have on Rio's strategy and our industry. He discussed Rio's best operator objective, including the importance of culture and diversity in teams, and the long-term commitment to positioning the Pilbara for a green steel future. Simon also emphasised the importance of building strong partnerships with key stakeholders and the significant ongoing contributions that mining and iron ore make to our economy. Thank you for sharing those insightful thoughts and perspectives, Simon. And congratulations to Jennifer for facilitating another engaging, thought-provoking and enjoyable discussion. Simon, on behalf of the Melbourne Mining Club, we wish you and Rio Tinto Iron Ore continued success in the future. Please join me in extending a very warm thank you to Simon by showing your appreciation in the usual way.
Thanks, mate. Cheers. Appreciate it.
Take that out and hold it up.
Exactly.
Hold it up.
Might have to check my luggage. Look at that. Thank you very much.
Thank you.